Welcome to this week's episode of Accredited Investor Markets Radio. Each week, we speak with you about investing in alternative assets. Unbiased and beholden to no one, Accredited Investor Markets Radio does not accept advertising from any investment firm or financial advisor. Accredited Investor Markets Radio is the spoken word sister of AccreditedInvestorMarkets.com, the internet's most comprehensive and unbiased educational resource about crowdfunding, angel investing, venture capital, private equity, private shares, and other investment classes beyond publicly traded stocks and bonds.
Hello, everyone. Welcome to Accredited Investor Markets Radio. I am Christopher Cahill. Later on, I'll be speaking with Sandy Chaikin, co-founder of Chaikin Analytics. And we'll be talking about that firm's approach to helping you achieve alpha in the public stock markets. For more information outside of the interview, you can look at A Few Minutes with Sandy Chaikin, which is a written interview on AccreditedInvestorMarkets.com, AIMkts.com. But let's talk about agriculture first. We had a very spirited interview on this program about a year ago with Charles Smith about agriculture. Charles Smith founded and runs a firm called Pegasus Intellectual Capital Solutions. And I love the fact that a farm boy from Iowa who essentially grew up in an E.B. White short novel has the word Pegasus in the name of his fancy financial advisory firm. But Mr. Smith knows his agriculture, he knows his aquaculture, and it goes way beyond what we imagine these things are. You can even go back and listen to that, as you can to all of our past interviews, by going to AIMkts.com and hitting the Accredited Investor Markets Radio button. You have access to all of the interviews. On AIMkts.com, June 11, 2015, there was an article entitled Harvesting Opportunity in Agriculture, written by Billy Ray Valentine. I encourage you to give that a look too. But a little more recently, September 3, 2015, in Bloomberg Business by Olivia Solon, or Solon. I'm not sure how she pronounces it. The last name is the name of one of the great lawgivers of ancient Greece. The name of the article is World War II Bomb Shelter Becomes High-Tech Salad Farm Deep Under London. And let me just read the first paragraph. 33 meters under the streets of central London is an old World War II bomb shelter that's been transformed into a high-tech underground farm. The long tunnels beneath Clapham are being filled with stacked layers of hydroponic beds, forming vertical farms for growing salads and herbs that can be delivered to tables in the city within 4 hours of harvesting. Right away, you're snapping your fingers thinking, why didn't I think of that? Of course these can be delivered to the tables within 4 hours of harvesting. They're bomb shelters. They were built to be next to everything. The subterranean farm is optimized for growing crops like pea shoots, coriander, mustard leaf, rocket, radish, and garlic chive, small leafy greens with a short growth cycle. The kinds of things Londoners from the Magic Circle firms, yuppies everywhere love, foodies everywhere love. And the cool part is, these are stacked, they're underground, it's temperature controlled. The food can be consistently delivered all year round. No hurricanes, no pestilence can get at them. They're protected in a bomb shelter, after all. Protection was built into the design. The entity that runs these bomb shelters is called Zero Carbon Food. It has raised around 750,000 pounds, British sterling that is, in a seed investment round, through a combination of crowdfunding through Crowdcube and from G's Fresh, a company which supplies salads and vegetables to various British places that sell such things. It's just a very virtuous cycle. By the way, the UK crowdfunding is far more advanced than American crowdfunding is undoubtedly helping this firm. So Zero Carbon Food has a competitor. The competitor is called Grow Up. Remember, Zero Carbon Food uses hydroponics in those bomb shelters. Grow Up uses aquaponics instead of hydroponics, in its vertical farm in a warehouse in Beckton, East London. I know they have vertical farms here in Chicago, where I'm based, as well. Anyway, aquaponics grows plants in the nutrient-rich wastewater from fish farming. All right, you're immediately thinking, how do they get fish farming water into this warehouse in Beckton, East London? The fish farm is in the warehouse in Beckton, East London. It's a closed-loop system. You get tilapia from one floor, and the nutrient-rich wastewater from fish farming goes to another floor to aquaponically grow these various greens. Bloody ingenious. Speaking of bloody ingenious, although this is no longer drizzly Britain, but rather sunny Southern California, at the University of California, San Diego, researchers have developed robot fish that can be 3D printed very, very small. The promise of sending schools of robot fish into our bloodstreams to vacuum up, eat toxins, or do various other things to help us. I'll just read the astonishing, and I mean astonishing, first two paragraphs. This is in the article, Robot Fish May Swim Inside Us One Day, in the September 5 and 6 Wall Street Journal by Daniel Ask, AKST. Researchers at the University of California, San Diego have built tiny fish-like robots that could eventually perform a variety of important tasks, from delivering a highly targeted drug payload inside a human body to detecting or even removing toxins from a liquid environment. The scientists created the self-powered artificial fish. Let's pause there. Self-powered artificial fish. Let's go on. Using an innovative 3D printing technology. Conventional 3D printing uses a nozzle to deposit succeeding layers of material, but the San Diego team relied instead on an array of 2 million tiny mirrors that project ultraviolet light in the desired pattern onto a photosensitive gel. This material, commonly used in medical applications, was then solidified into a fish shape by exposure to the light. The article goes on to describe how they achieved movement on these fish. The scientists referred to in the article from University of California, San Diego are Shashin Chen and Joseph Wang, and the article does refer to the underlying scientific piece entitled 3D Printed Artificial Microfish in the August 12th edition of Advanced Materials. Well, I'm astonished. Let's get on to the interview. We have with us Sandy Chaikin. Sandy Chaikin is co-founder and head of marketing and communications for Chaikin Analytics, a mobile stock research and analysis platform. With no prior experience, Sandy started investing in 2012 with Chaikin Analytics and built a portfolio that continues to outperform the S&P 500 and most money managers. She spotted the two best performing stocks of 2014 and bought at the right time. Both stocks rose over 125% during that year. Sandy's portfolio continues to thrive. She is a contributor to NASDAQ.com, where she also hosts webinars on investing using examples from her own portfolio. And I should mention that AIMkts.com has published a print interview with Ms. Chaikin called A Few Minutes with Sandy Chaikin, Co-Founder of Chaikin Analytics. Thank you, Sandy. It's good to have you here.
Well, thank you, Chris. It's great to be on with you.
All right. So you have a basic message, if I may, and that is that your experience shows that one need not have a finance background in order to be a successful investor, even a successful stock picker, if you have reliable and proven tools. Could you expand on that a little bit?
Oh, I'd be happy to. I started investing, as you mentioned in my bio, in 2012 in stocks. Prior to that, my investments had been totally in mutual funds because I never felt confident enough to be able to pick stocks. I didn't feel I had the knowledge, nor, frankly, did I really I wasn't really interested in learning how to pick stocks. So I put my money in mutual funds and eventually hired a financial manager, and then the 2008 and 09 meltdown came, and my portfolio dropped 40%. So it was at that time that I decided that I must learn how to do this so that I can take control and manage my own money. After all, no one's going to look after your money be more interested in managing and growing your money than yourself, right?
Well, all right. So to compress things a little, you've also said that, and we're going back in time a few weeks before the recent downturn. You also said that up until a few weeks ago that you own 8 to 10 stocks at a time, spend 15 minutes a day attending to them through Chaikin Analytics, and that your portfolio, again, before the downturn, it was up 18% compared to the S&P 500's 2% through the beginning of August 2015. Can you discuss that a little bit?
Sure. Well, I mean, obviously we all know what's happened in the last couple of weeks, particularly in the last week. The S&P is down an average of a little bit over 9%. And looking at my portfolio, it still is outperforming the S&P 500. My portfolio is down about 2% as of today.
What do you do with those 15 minutes that you spend on?
What do I do with those 15 minutes? Okay, well, I invest using Chaikin Analytics, which you mentioned in the intro part, is the workstation that my husband and I created after the meltdown. And just to back up a second to put this in context, the analytics were designed for individual investors like me, who after the meltdown we're now managing our own money, but we lack the tools. So Mark Chaikin, my husband, who was also a stock market expert, had been on Wall Street for 40-some years creating indicators and tools for professionals so that they could make better choices. So what he did was he took those same tools and bundled them into a model, a 20-factor model, and then put them into displays on mobile and on desktop, which were very clearly understood, like green for bullish and red for bearish. So the user interface is very clear, concise, and user-friendly. So that's why I can scroll through my stocks in 15 minutes a day. I go through each chart for every stock and look at the indicators, see where it's going, particularly the power gauge rating, the 20-factor model, because that is a predictive model that looks out 3 to 6 months and evaluates the outperformance or underperformance of a stock. So looking at that in combination with the other indicators that are in the workstation, I'm able to get a complete picture on any stock. And since I keep my portfolio to 8 to 10 at any one time to avoid the whole information overload dilemma, I'm able to scroll through them a couple of times a day and literally spend 15 minutes a day doing it.
So Sandy, you hold 8 to 10 stocks at a time. I don't know if you buy them all at the same time. But let's just assume that the 8 to 10 stocks you're purchasing to sell them for more than they are worth now. You're not shorting them. Would you have a different strategy for each of the 8 to 10 stocks and you know generally how long you're going to hold them, that sort of thing?
Well, Chris, no, basically my strategy is the same, and I base it on a 5-step method that we've developed using Chaikin Analytics. And so I use the same methodology for any investment that I'm making, and that is basically to look for stocks that are on a rising trend. If I'm looking to buy a stock, I want it to be on a rising price trend, have a very bullish power gauge rating, have strong relative strength, so it's outperforming the S&P 500, have strong Chaikin money flow so that I know institutions are buying it. And if all of those 4 factors meet my requirements, then it's a very good candidate to buy. Another criteria that I like to fill when I'm looking for a stock is I like the stock to be in a strong industry group, because research has shown, independent research, particularly by Zacks, has shown that buying strong stocks in strong industry groups tend to outperform strong stocks in weak industry groups. So you might as well put the wind at your back, as we say, and go with the most you can when you're going into and buying a stock. You want all the odds in your favor, so you might as well get something, look in the strongest industry groups. And right now, and up till now, they've been in the banks, and the big banks, financials, insurance companies. Medical care has been very strong, and I have focused a lot of my attention on medical care because of the Obamacare kind of leg up it's given these companies, medical companies, Aetna and Mylan and Edwards Life Sciences. There's a number of stocks that I have. They're in the medical care industry. But that's basically what I do. And then when I sell, kind of the reverse has to happen. There are certain indicators that tell me that it's time to sell. For instance, if the power gauge goes neutral or bearish for certain, then I sell if it goes bearish. But if the power gauge rating on a stock goes into the neutral territory, and if one of the other indicators, particularly relative strength, turns negative, then that's a really good time to get out. And we also have a 200-day moving average on the chart. So I get an alert if any one of my stocks drops below that 200-day moving average. And that's a great precursor to say, hey, this might be a good time to get out.
Well, okay, so the Chaikin Analytics tool, does it handle only equities and not bonds? Does it look at commodities? What does it look at and what doesn't it look at?
It looks at stocks. It evaluates 5,000 stocks, U.S. stocks. We don't do bonds, but we do ETFs. And we have about 1,500 ETFs in our system. Our system is list-based. So you can basically create your own lists. You can go into and evaluate, say, an SP 500 list. You can sort an industry group, say you can go into medical care and sort by that kind of a list. So it's list-based, but it's on stocks and ETFs.
And it provides the user an ability to short as well as to bet long.
Oh, yeah. A lot of our subscribers have really been making big profits these last couple of months on the shorts because, they'll go in. I mean, like I'll go in looking for bullish stocks, right, for a long position. But they'll go in and look for the worst industry groups, and then they look for the worst stocks, the bearish-rated stocks in those industry groups, like Yelp and Twitter, LinkedIn, Wynn Resorts, Amazon, well, until recently that turned around, but Yahoo, for instance. There's a lot there that are in the real bearish camp, and they're weak stocks in weak industry groups, and those are particularly good candidates. We also put out a newsletter every Sunday alerting our subscribers to what happened, what Mark felt happened in his commentary on what happened last week and what he feels is coming ahead for this next week. And then he gives particular attention to particular stocks that are reporting earnings that picks what he calls a stock of the week. So he's kind of been on a roll here with picking bearish stocks of the week like Yelp and Zillow, and people have been cashing in big time. We got, the day after he issued that report, we got a testimonial from one of our subscribers. This was just about 2 weeks ago, saying, gee, thanks for that great call on Yelp. I just made $17,000 in 2 days. And I've only been a subscriber for 2 weeks. So the short sales have been very profitable lately. No surprise there with everything kind of tumbling down, right?
Well, I'd like to put this entire discussion in a larger context. We've had Larry Swedroe of the BAM Alliance on twice and Ted Neild of Gresham Partners on twice. They disagree on a number of things, but neither believes there's much chance to get alpha, which is what you're talking about getting, by stock picking in U.S. publicly traded equity market. And their reasoning, among other things, is that scads, armies, myriads of brilliant people are chasing alpha in every conceivable way. But you claim to get it by picking stocks. To them, that's implausible. Not you in particular, but a stock picker in particular. I mean, how have you done against the S&P since you started?
I've done really well. I started in 2012 with just 2 stocks, eBay and Comcast. One of them went up 40%, and one of them went up in the 60% that year. And then I put more and more of my money, as I was getting confident doing that, into individual stocks in 2013. So I wasn't fully invested until 2014. But in 2014, I did quite well. I think the S&P was up about 11%, and I was up about 14%.
And you chose the 2 best ones. What were those?
And I chose the 2 best ones. So, I mean, have those guys give me a call. I'll tell them what I do. But I mean, I found Skyworks, got in early. That rose 146% that year. And Southwest Air, which was also up big time. It was up 126% last year. And I bought them both early in the game, doubled up on my positions because all those indicators that I was telling you about, Chaikin power gauge rating, relative strength, Chaikin money flow, and price trend were all so strong that I had the conviction based on those factors to buy more. Usually I just put the same amount of money into each stock so that I have, 8 or 10 stocks. They all start out with an equal value. And then, as I say, if I feel strongly about a stock like I did with Southwest Air and Skyworks, then I'll double up and I'll put a second position in there. So I did that with both of those. So I paid for a really nice vacation and more to Turkey last year. My husband and I went to Turkey for a wedding, and all thanks to some of these proceeds. So it really has given me the freedom to do a lot of things that I'd like to do that I really never thought possible. But I would encourage anyone to try Chaikin Analytics. I mean, if I can do it with no prior experience in the financial world, imagine what professionals could do. And we do have a lot of professionals that are using the system. A lot of hedge funds, Soros's office is using it, Fidelity's using it. So we have a lot of confirmation on how it works. But I think my biggest confirmation that I can give to you is that NASDAQ invited us to create indexes for them based on the power gauge rating.
I wanted to ask you about that. What are the indexes? Can people invest in these indexes? What's the purpose of these indexes? And what are they, if you wouldn't mind talking about them?
Absolutely. Be happy to. NASDAQ, as you know, has a lot of indexes. One of them is a large cap fund. They also have a small cap fund, and they have a dividend achiever fund. And what they asked us to do after testing the power gauge rating every which way to Sunday, they asked us to create indexes based on the power gauge rating in these three fields. So what we did was we took the stocks that were in each of those three funds, overlaid the power gauge, weeded out ones with bearish ratings and neutral ratings, and just stuck with the ones with bullish and very bullish ratings, and put them into a model, an index model basically, and let that run for a year. Now, the year was up in April of 2015, and they are evaluated against their benchmark, and the benchmark being just the NASDAQ index. So in all cases, the Chaikin NASDAQ index greatly outperformed. I mean, it's by 49%, 52%, and 77%. So there's,
dividends, large cap and small cap respectively.
And small cap, yeah. So, I mean, there's the proof of the pudding that the power gauge really does add alpha. How else could you explain that?
So that was a measurement device. Is there a way that people can simply, I guess if they're doing the power gauge, can they invest in that, one of those indexes?
I wish they could. Right now, we're working, NASDAQ and us are working with partners to create these indexes. Everybody wanted to have at least a year experience before they wanted to market it. So actually Mark is on a phone call right now with a large bank about creating these indexes for this other bank. But right now, unfortunately, you can't put your money into this, but you will be able to soon.
Okay, well, we started this interview by talking about what your specific experience, what Sandy Chaikin's experience was, going from having not much savvy as an investor, shall we say, or at least professional savvy, and then becoming a successful investor. So that's how we started. And then we got into some of the technicalities, some of the measurements, performance of Chaikin Analytics. But let's end sort of back where we started, but more generally. That is your concern with the peculiar challenges facing women investors, if you wouldn't mind discussing what you're doing about it and sharing your thoughts.
I'd be happy to, Chris, because it's something I feel really passionate about. Because, as I mentioned earlier, the research shows 72% of all women lack the confidence to make financial decisions. They feel they don't have enough information, and therefore they don't invest and they don't make financial investment decisions. They just don't do it. It's like a taboo almost in their culture. And I understand this because I was part of that 72% until a couple of years ago when I started using the Power Gauge rating to guide me. But I get this because I was in that same boat myself. And, as I said earlier, after losing 40%, I really had the conviction that I had to learn how to do this and manage my own money if I were to secure my retirement. And I feel passionate about passing that knowledge on to other individual investors, but in particularly women, because, as I say, women lack the confidence, yet women control most of the money in this country. According to a Bank of Montreal study, women control 51% of the wealth in America, which is a pretty staggering amount. And another study done by Pew Research shows that 9 out of 10 women will be the sole financial decision maker at some time in their life. I mean, think about that. That's huge. 9 out of 10 women are going to be supporting their families at some time in their life. Women are living longer. They're outliving their spouses and partners. They're marrying later. They get widowed or divorced, and they're on their own. So women have to learn how to control their money because really good chance, 90% chance they're going to have to do it at some point in their life. So they might as well start now and start investing in themselves. I mean, my motto is if I can do it, you can do it, because I've gone from novice to knowledgeable in 3 short years, and I had no prior background. I never took a finance class or economics class or anything. But I don't need to. With this methodology and following these 5 steps that I outlined, I'm able to make really good decisions and outperform the market. And our research shows that the majority, 75%, of financial professionals have underperformed the market in the last year. So that means only 25% of professionals are outperforming.
Well,
so if
that's
someone like me, that's a brutal statistic, isn't it?
Yes. Yeah, the hedge funds haven't done well, although I guess they were doing a little better this year. But to be fair, the 40% you lost, some of that ground was made up. But maybe
Absolutely.
But a point you've made elsewhere is that women and other investors who are not confident tend to keep their holdings in cash, which doesn't grow, and in index funds, which have mediocre growth compared to that which you're talking about generating through your own stock picking devices.
Exactly. I mean, most of the wealth in this country is held in cash, which is staggering to me. Only 18% of our assets are in stocks. So there's huge opportunity. Yet stocks are really the only game in town if you want to grow your money and build a nest egg for retirement.
This said after a 2-week period.
After this, now's a really good time to come in.
Yes.
Use the Power Gauge rating to direct you towards strong stocks and strong industry groups. And when the dust settles here, I wouldn't start buying right away, but when the dust settles and we start seeing an upturn, boy, that's a great opportunity to go in and get some really great stocks at undervalued prices.
I imagine Warren Buffett is saying the same thing.
Well, if I can be in the same camp as Warren Buffett, that's a good thing, right?
Well, all right. I guess we could leave it there. I think it's been a really interesting discussion. Time will tell, but so far the signs are good, you're saying, for Chaikin Analytics especially. Although there's one thing I would like to mention. If hedge funds and others, larger players, are beginning to use Chaikin Analytics, wouldn't that over time kind of vitiate the advantage to be gained by using Chaikin Analytics?
Oh, I'd love to have that problem. The tools that we give people, the 20-factor model, takes 20 factors that the institutions and the pros use every day to evaluate stocks.
Yes.
I mean, Mark knows that because he created these tools for Wall Street for 40-some years.
Yeah.
So what he did in his research in creating the model is he started with 200 factors and whittled it down to the 20 that tested to be the most effective in looking at the outperformance or future outperformance or underperformance of a stock. And those are the 20 factors that the pros use every day when they're evaluating a stock. So anyone using our system is trading like a pro. They have professional quality tools, but in an interface that they can understand. I mean, I've looked at these charts that the pros get, and I have no clue what any of them says. But I do know red from green, and I know up from down, and that's pretty much, what you need to know I'm not saying the interface, the way it spits out the information is simplistic in the display. What's underneath the hood, though, is incredibly complex, as you can imagine. It's this algorithm that weights these 20 factors differently. But, what you see on the outside is pretty simple, and then you can drill down into any of the 4 components or any of those 20 factors that make up the model. So you can drill down and get it as granular as you want, but it starts with the overall rating.
Oh, so it's kind of an educational thing as well as a way to make money.
Yeah, exactly. I mean, it's all the tools you need to know to evaluate a stock in one place.
Well, Sandy Chaikin, it's been interesting, and I thank you for joining us.
Chris, it's been a pleasure. Thank you so much for having me on your show.
This has been Accredited Investor Markets Radio. Thank you for listening. And by the way, at AIMkts.com, you can find this program, as well as the prior programs referred to during this program, the 2 interviews with Ted Neild and the 2 interviews with Larry Swedroe. And on AIMkts.com, you can find a few minutes with Sandy Chaikin, as well as a wealth of other information relevant to taking control of your financial future. Accredited Investor Markets Radio is produced by Stephanie Strait. Thank you again for listening. Let's do this again sometime soon.
Thank you for joining us. If you enjoyed this episode, you can subscribe through iTunes or Stitcher, or you can download our app from Libsyn. You can also listen right on our website, www.aimkts.com. Each week, Accredited Investor Markets Radio brings you news and education about investing with a focus on alternative assets. To see a short written summary of this episode, go to www.aimkts.com. Accredited Investor Markets Radio is a production of Financial Poise Radio Productions, LLC.